Awesome. Well, thanks everyone. Thomas Lind, CLA. Yeah, so Coast veteran. So I spent 7 years in the Coast Guard, joined out of high school, worked my way all the way up from New Jersey, originally got stationed in Clearwater. I was actually a C-130 navigator. So I was on airplanes. I was never on boats. Everyone's like, what boat? I was like, I was never on boats. So a little bit different of a coastie experience. But then, had the same experience I think a lot of our vets have coming out of the service and trying to figure out what's the next step. Pretty daunting. They'd give me orders to California. I was already dating my now wife here in Tampa, and it was I was like, do you want to go to Sacramento? And she said no. So it was pretty clear what my next step was going to be. So I actually came out UT, University of Tampa here, got my bachelor's, master's, and MBA from there, all through the GI Bill. And a lot of it was kind of just mentoring and finding other veterans that I had known in the system and kind of getting, input from them and advice on my career and what I should do next. Because as most of us know, coming out of the service, it's daunting trying to, take those experiences and the skills that we have and lateral them over to the real civilian world. So, luckily I was grateful for having the support and networks and communities like ATL to really help, guide me through that process and kind of see how I could take what I learned and transition it. So it's been great. It's been now working at CLA for the better part of 14 years. So here in Tampa now, I spent some time in DC and then came back to Tampa. And so now I work on the tax side as a CPA, and I assist a lot of growing technology businesses all throughout the region and internationally, and focus a lot of my time helping out veteran organizations and veterans as well as they come out with the same questions. I know the input or impact people had on my career in starting out, and so I try to do the same thing as well to give back. And so it's great to be here today. Phenomenal organization. I really appreciate the time to be up here today and be with you. So.
Of course, and before Ray, so I'm going to make y'all pass so everybody can hear me in the back. But before Ray introduces himself, bless his heart, he has a 4-month-old. So
that's why he's here.
That's why he's here. So if anybody wants to buy drinks for Ray, I heard he loves bourbon, beer, alcohol, liquid of any sort. Ray, please.
Thank you, Zach. Good evening, everybody. I am Ray Busler. I am a principal at CLA. I was born and raised here in Tampa. My parents were born and raised here in Tampa, and my grandparents were either born and raised or they moved here before they can remember. So I am a bit of a unicorn in that you never meet someone that is like actually from Tampa. So you can say you have. I have been with the firm now for 13 years. I went straight from Chamberlain High School over here over to the University of Florida, got my bachelor's and my master's in accountancy, and I've been with the firm now for 13 years, focusing on privately held businesses that if you're making product or you're moving products, so manufacturing or logistics, I can devise an audit plan for you. So I go in and I verify that your numbers are correct. I am not a veteran, however, have a lot of veterans within my family and a huge respect for the veteran community. And if there's any way that I can ever help or give back, I seek it out willingly. So thank you guys very much for having us, and love to go over all this fun accounting and tax fundamentals for startups. Yeah.
So yes, please give them a round of applause because usually we don't let accountants out of their office, right? It's like lock the door, you're not welcome out here, especially Coast Guard. But there's some amazing pieces attached to CLA that when I think of an accounting firm, a lot of entrepreneurs, again, we're talking heavy on the entrepreneurship side. How many people use like TurboTax or did your own taxes as you launched your first business? I'm not the only one. Come on. No, nobody. Okay. Thank you. It makes me feel better. An army way of doing things. I guess I did my own taxes. It didn't go well, y'all. But there's an interesting piece of being a top 10 firm in the country. I always think about how EY. I'm not going to hire EY, right? We're a smaller organization. There's no way in that spectrum. On my private equity side, we're 2 years old, an acquisition or two in, and we're still not like a Goldman level. We don't have $100 billion, right? And when you think of the top 10 firms, that's what my mind goes to, is there's no way they're achievable at the level of entrepreneurship we are, especially as we add more and more to our private equity portfolio. But it's something that as we first met Ray, I think we met here at one of these events. He's been very gracious with his network across the country. The CLA office in Atlanta, we play with a good little bit. He's introduced me to people, San Diego, all across the country. So not only do they have the national reach and national partnership that we're always looking for, but they also focus in a realm that's a little bit different than a lot of the top 10s. where they don't do any publicly traded companies, which means their experience is very different, right? Where all of a sudden they're not, I'm not going to get outshadowed, if you will, by somebody that has $100 billion portfolio, right? So for y'all, I would love from each of y'all's perspective, talk about that a little bit, because I think I wanted to put context around the attainability of having a firm that is in-house everything, where sometimes we go to our CPA over here, we go to our accountant over here, then we go to an auditor over here. But y'all are kind of built a little bit differently for privately held companies. So if y'all could explain that a little bit.
Absolutely. So, one of the things that I think that we do really well in the market is really meeting our clients' needs, but at a value that really makes sense, right? So you see a lot from big firms, right? They have great resources, deep bench, everything, but the cost structure doesn't really meet the value or the ask that the clients have. And one of the things I know we do by focusing on privately held businesses, I mean, we look at the middle market, the heartbeat of America. That is the majority of the U.S. economy. And so there's such a huge piece. I think everyone looks at those bigger clients and those larger scale companies, and we look at it and we say there's such a huge cross section of America's economy. Small businesses, right? Mom and pop owned shops that are looking for transition of wealth that's upcoming. As you see the generational change. You look at the tax needs, and it's these privately held businesses, the business taxes, the actual owner's taxes, and then helping them on an owner transition, right? As they seek to transition those, whether it's through generational wealth or exiting and then, obviously taking cash out upon an exit. And so the one thing I think that we do really well in that segment is focusing on that, helping them on everything from the accounting to the tax, but also the wealth side of it, because they're so interconnected. Many firms you'll see, you have a wealth advisor here, you have a tax accountant here, your bookkeeper's over here, and it's a little disjointed, but we really seek to just kind of have that seamless approach and assisting with everything under the hood there. And again, with the owner transition, the wealth. And again, I think the biggest opportunity for us and for everyone, in the next 15 years is going to be that transition of wealth and how businesses exit, right? Generational wealth transfers. And then also, obviously, as the economy continues to grow and change and businesses adapt to AI and all these other scary things we hear about all day, we're really there with you, kind of helping you understand what needs to be done and seeing what evidence that we provide value.
Yeah, that's really well said, Tom. And I think I don't have anything to add from like a business side, right? Because that is who we are at CLA. We focus on privately held business owners, not-for-profits, and government. So if you fall within that category, which is like close to like 70 to 80% of all businesses within the country, we can help you, right? I think for me, right, it's a lot more personal. I like to make a difference. I like to help people and to see the impact that I'm making. And if I were to go into $100 million organization, I would be but a drop in that pond, right? Whereas for these privately held business owners that are within the Tampa Bay area, like I can go literally right down the street and go and visit one of my clients. I can go and I can see the impact that I'm making by the very small incremental, just suggestions, adjustments that they make with their processes where they can achieve their dream of getting to the next level, getting bank financing, going through an exit event or selling their company, right? And creating that wealth for the people I care about is what keeps me coming back to work. So my purpose and reason for staying at CLA is a lot more about that gratification of time.
And I would love for y'all to demystify a little bit. For years, I had nightmares about certain things from the military, and then I got into business. It was nightmares about my accountant and tax season. Demystify it a little bit, just from y'all's perspective. Why would working with an accountant and actually having a great relationship, because that's a big thing that I think y'all are very different, where having that relationship is important, because I think money is like a really intimate thing, especially in business and life. Nobody wants to talk about their finances, good or bad, indifferent. But I know y'all have a different spin on that. So can you just demystify a little bit? What's it like working with y'all? What makes it more personal, where we shouldn't be? Y'all aren't the boogeymen, if that makes sense.
Yeah, no, that's well said, Zach. So something that I like to think of, right, is that when we think about these publicly traded companies, they're flying at the PCAOB level, so Public Company Oversight Board. They're the ones that make all of the rules, and they have you jumping through hoops that are way higher than most people would ever want to try to achieve. Play in this AICPA realm, so the American Institute for CPAs, Certified Public Accountants. they make up a lot of rules that are specifically designed for privately held businesses, right? Small to medium-sized entities. That allows us to, from an audit perspective, I'm always concerned about my independence. We are able to remain independent while being collaborative and helpful. So whereas a big four or a larger accounting company would have to maintain strict lines of communication, you would have to talk to X, Y, or Z person before you were ever to get an answer for something. We're significantly more agile, and we're able to activate on an offhanded comment that someone makes during a call and to pull in the experts that we have across the entire firm, because we have that national reach with a ton of different specialties, and get you the expertise that you need. Because not everyone, myself included, has seen everything, right? We utilize our network of people within the CLA family, and that network is extremely strong in being able to pull in the expertise that you need at the drop of a hat.
And one of the things, that I see a lot with our clients is that it could be a small business, or, my wife does this, she'll have side projects, Etsy, things like that. And, there's always a question, it's daunting, of like, what do we need to do? I know what we need to do, but you get a lot of the same questions, and it can be very scary, right? The IRS boogeyman is out there, and everyone's like, I don't want to go to jail. I'm going to go to jail. These are things that could be scalable and fit to well, you're not going to go to jail if you do the right thing or try to do the right thing. I'll rephrase that. Yeah. Well, Tom Lynn told me I could do this. But one of the things is that, the accounting needs, especially for startup and small businesses and family-owned businesses, there are certain things that are very important to make sure that they're done, discipline around accounting and things like that. But it doesn't have to cost a ton of money. And I think that cost and that value is really what a lot of companies struggle with, is because they think to myself, okay, I got to hire a CPA. I understand this is getting a little too complicated, but what's the limit, right? How much is this going to cost me, everything else? And I think the biggest thing that we do is really talk to our clients and help them understand what their needs are. Because whether you're a big company or a small company, a startup, a family owned, there are different needs for the businesses. And it could be from tax wise, it could be from the accounting standpoint. We have a lot of clients that come in and they think they got to buy this extremely expensive accounting system. And it's like, you can just use QuickBooks, but helping them understand that. And that's the piece I think that most people get worried about when you're starting a business. You're so focused on the business. You focus on the commercial side, customers, making them happy. And then there's this whole other back office thing that needs to be accomplished. And the question is always, how much is this going to cost me? Is this going to take all my profits away? I mean, it's a legitimate concern when you're working that hard for it. So really just come along with someone who understands it can, be an advisor, not just someone that fill out forms. I say I'm working on the tax side, we're professional form filler outers and give it to the IRS, right? That's all we do. But in reality, that should be the smallest piece of what we do, and really helping you understand your responsibilities, what you need to do to make sure that things are done right, and also help make sure that you're able to grow the business and your books and records and everything keep you in line. So I think it really just becomes demystified. It doesn't have to be this super expensive operation. You just need to have the right support, the right advisors, and just get the value for what you need to make sure you're not overpaying.
Yeah, well said. I think it's an important piece. One thing when we have experts like this in the room, sometimes we're highlighting people making an impact in the community. We're talking about their story, their journey. But when we have experts like this in the room, I always want to make sure we have opportunity for questions and answers, Q&A aspect. So I'm going to let them talk about some of their areas of expertise. But also, if you have any questions, thoughts, like demystifying more, the reconciliation bill changed a lot of things on the private equity side for us. Laws around 990s, nonprofits. Things are changing all the time, and they impact us. And it's something that I don't track very well because, again, I try to close that tab or that pop up about accounting stuff. So if y'all have any questions, they're prepared for y'all to grill them with any of the things y'all may have. But they both have a few things, just highlighting their expertise and highlighting a little bit more of what they do. Y'all take that part away.
Yeah, thanks, Zach. So I think we wanted to just kind of start at a high level as to, right, if you're considering starting a business, if anyone has any questions or has already started a business and wants us to just fast forward, right, just please let us know. But we'll kind of start from the beginning, what considerations that people need as they're kind of getting the business off the ground. And then, right, how do you position yourself for some sort of exit event? Because that's how you really generate that generational wealth, which is what I think we are all striving to achieve, right? So to maybe take a step back and go back to that demystification of accounting. People see it as a necessary evil. They see it, they're so focused on the operations, right? That the accounting is typically like a complete afterthought, where if you go through the appropriate steps at the beginning and make sure that you're set up well, your accounting function can work for you. And what I mean by that is you are able to effectively project cash flows and effectively set your business up so that you can continue to grow, to serve your client base without having to cut corners or without having to completely upend things, and really just kind of focus on the operational side to continue to grow the business, right? So why clean financial statements matter? That, like I said, that's to make sure that you are aligned in your objectives for the company, right? In that your accounting is giving you accurate information. That QuickBooks can typically give you a couple high-level dashboards or things like that, but to have someone that's in there reconciling your accounts daily is critical. And I can't really emphasize that enough. If you're not at a minimum doing your cash on a weekly basis, it's going to get out of hand extremely quickly. So accounting is definitely one of those things where you want to start on it earlier, and you want to make sure that you're doing it consistently, so that you're not having to reconcile 4, 5, 6 months at a time, having to go back in time, trying to find information on transactions. Is not a fun exercise. I've done it too many times. Lily's done it too many times. It's not a fun endeavor. Tom?
Yeah, I always tell clients, ounce of prevention is worth a pound of cure, and that's like the number one thing that we consistently see. And it also, your accounting function and all your functions here really typically depend on what you're doing. If you have outside investors, they're going to want reporting, right? They're going to want to know, we put in X amount of dollars, where's my return? How is that return generating? But if it's a family-owned business, a lot of times it's cash, taxes, and just overall, profit and payroll, right? You're watching your cash flow and your burn rate and everything else. And so you need to have that as a background, because it really is just giving you information about the financial, ability of the business. How is it generating cash? How's the profitability? What's your tax look like? And so those things are hugely important. And then as the business grows, one of the things your accounting should evolve and your tax profile should evolve as the business grows. And looking at what we see a lot of family-owned businesses, right? They're starting up, they're doing really well, but then the question says, hey, we need to exit at some point. The kids say, no, we don't want to do this business. My father owned a grass seed business, and when he was looking at what is he going to do, I was like, yeah, I don't think grass seed is necessarily what I want to get into. And so there was a different route for him. And so that, that really sets up where the business is going, where the direction is going, and prepares you for what you need to have done. If you're going for an exit, again, that's that ounce of prevention, pound of cure. Whether it's accounting, whether it's taxes, anyone before you go through an exit is going to go in and dig into the details. And so that's why it's always important to make sure maximizing value and keeping things clean. And so, when we talk to clients, a lot of times the first thing is going to be that accounting discipline, make sure your books are square. The next thing that typically comes in is, well, what type of entity should I be? I'm a tax side. So, we talk about the initial things of, what is a discipline, what you should be doing internally. And then the other question is, what should I be? An S corporation, partnership, C corporation, sole proprietor, Schedule C. These are all valid questions company asks all the time. And really, I always tell them what entity selection you want your operation to be is really going to come down to a couple things. One, what's your personal tax profile look like? Certain things are pass-throughs where partnerships or S corps, the businesses, generate profits, income, losses, flows to you personally on your tax return. There are C corporations out there, different entity paying type, but there's benefits there for small businesses and startups, qualified small business stock, which was recently revamped and improved, meaning if you operate a C corporation for a number, at least 5 years, and you meet certain criteria, you can actually exit and exclude up to $10 million or 10 times your basis of gain. It means you never pay tax on that. Huge opportunities out there that I think are often missed just because not having the understanding, the knowledge when you're setting up the business and saying, what can help me on the exit? A $10 million exclusion on a gain? That sounds good. That's quite a bit of money. And like I said, that was just enhanced through the one big beautiful bill that was passed. And so those types of things, that's where your value can really come in early on, that we often see where we can help clients think through those aspects of it. And then, on the tax side, we always think as well is people need to understand that the business that you're operating, there's so many different tax types. We always think of income tax. That's like the number one thing I think we typically think about. But then you forget, well, we have payroll tax, right? We have employees. That's a huge cash burden to businesses. And then you think of things like sales and use tax, right? Things that I think that probably is the one area that gets overlooked the most common, where businesses are selling widgets or whatever it may be, services that may be taxable. And all of a sudden you're in the hole $1 million because that's a tax the consumer was supposed to pay you that you paid the state. You never collected it. Now the company owes it. So there's so many different areas of tax. Property tax is another one. We're in Florida. Florida is very tax friendly, but there are also some things that, maybe not so. Florida has countywide tangible property, personal property. So if you're a business and you have desks and tables and everything else, believe it or not, you pay property tax on that to the county each year. Fill out a form and submit it. And I think those are the types of things that often get overlooked because it is a complex web. And so I think that's where we see a lot of the, kind of risks that come in that we try to help people understand that piece. So, going in.
What's the difference between an S corp and a C corp?
So an S corporation is a pass-through. So what that means is that if you have a business and it's an S corporation, they don't pay tax. They just calculate basically the income and then it flows through you as the investor. And then you pay tax on your personal level. And there are benefits and sometimes disadvantages. Like I said, if you're a C corporation, the entity pays the tax and then you get a dividend. So there's 2 layers of tax. So you often hear a lot of times people will say, well, I keep hearing that I should be an S corp or I should be a C corporation. I tell everyone the same thing. It depends. And the reason it depends is usually it's a modeling exercise because depending on how much profit you're getting, depending on the exit opportunity, there's all sorts of things that can factor into that. What type of entity should I be? So I will caution against, a lot of people will sit in environments like this talk and they say, oh, I heard I should be a C corporation. And it's like, that might work for them, but it might not work for you. And so that's where asking those questions is great because that different taxability also is different exit. Like I mentioned on a C corporation, your tax might be higher each year as you're operating the business, but if you're able to exclude that gain, you might be better off in the long run by being a C corporation with that qualified small business stock exemption. So that's where, having that advisor, at least understand what questions you should be asking, generally help a lot, especially in the early stages, because once it's set up, sometimes it's hard to undo or unravel what's been done already.
I think something else to add on top of that is, right, for an S corp like you had mentioned, there are certain requirements, right? So there have to be under 100 individuals that own stock within the business. There cannot be more than one class of stock, right? So there are specific things and legal requirements that are required to be met, right, in order to even qualify as an S corp. And really aligning your professional network, right, and making sure that your accountants, whether you go with a firm like CLA, where you can kind of have all of your bookkeeper and your tax professional, your wealth advisor all under one house, or if you have, right, a few disparate providers, you want to make sure that you're getting them all aligned. Because if you're telling one guy one thing and you're telling another guy another thing, they might be fishing for the information that is applicable to them, but not necessarily applicable to you as the business owner. And you need to have that clear conscience, that clear vision, right, to really help guide the company forward. And that is incredibly important.
That's okay. And that's what you said, quick. I went quick enough for me, and I went done.
Yeah.
Yeah.
Yeah, and but the S corp is the great example of like there's tax advantages to that, and so it's a very common, but there are limitations, like you said, and where we see a lot of companies that are S corps for long periods of time, and then it becomes a time to sell. A lot of times there needs to be a lot of restructuring done because private equity is working their way heavily in the mid-market, even in industries you would never think, HVAC companies, construction, small construction
Service entities, yeah.
Service entities, right? And so when they start coming in, a lot of them can't be an S corporation. So there's a lot of restructuring and things that need done there. And that's where I think where we see it might work for a period of time, but you also want to make sure you have that optionality later on down the road to make sure we can maximize an exit of value opportunity. Because, if there's, and it goes back to making sure everything's done early, that discipline in accounting is done right, and your tax profile as well, because the worst thing you want to do is work to build your business up to being a $20-30 million business, and then you have a buyer comes in and finds out, well, you actually have $4 million of tax liabilities from 13 years ago that the statute never ran and they still exist. And we're going to haircut the value of the company based on that, because that happens. They pay. I used to work in deals, and I will tell you we got paid to go find those liabilities just because a buyer didn't. And same thing, if you're going to buy a company, you want to make sure you're not inheriting something that they neglected years ago. And that's where that discipline and being ready for that opportunity. Because look, if you have a business, there's an exit at some point, right? Whether that's just simply selling the business or selling the assets, there's always a consideration of, okay, how do we build this? And really, how do we get out of it? And that's where I think the accounting and the tax piece, that ounce of prevention, worth a pound of cure, comes up. So, entity selection, hugely important, making sure that fits your profile, fits your exit opportunity or what you're trying to do. And then, the other thing too is just even operating the business. Like we talked about the property tax or tangible, that is a huge missed opportunity. Sales and use tax, huge opportunity. The amount of businesses I have, and even some very large businesses that end up finding out they have millions and millions of dollars of exposed liabilities that they just never knew existed. And you want to catch those early and often, because like I said, you never wanted to catch on an exit. And then, there's so many incentive schemes out there for business owners these days. The One Big Beautiful Bill enhanced many of them and changed certain things. And so, things like research and development credits, WOTC, if you have a business with a lot of employees from different areas, veteran groups, huge.
WOTC is huge for the veteran.
Huge. You're hiring veterans, people with criminal backgrounds that meet certain criteria, you get a tax credit for hiring them. So there's so many different incentive programs out there from a federal, state level that companies, I think, just don't know exist. And so we're just leaving money on the table for a lot of them. WOTC, I know you have many clients that use the WOTC, and it's a huge opportunity. But unfortunately,
it's literally cash back in your pocket. If you are hiring veterans, you are hiring, to people with criminal backgrounds that have reformed, right?
I was going to say criminals, but I was like, can't think of another word, but that is.
But right, they're disadvantaged populations, right? That are specifically being incentivized to bring on and give you a credit, which credits are dollars directly back into your pocket. And so if you're not utilizing all of the credits that are available to you, you're giving Uncle Sam free money. And, as much as you guys might want to do that, I like keeping my money in my pocket. So that we really try to focus, right, and make sure that we're giving the best advice possible. But in order to do that, you need, right, that clear conscience, that clear path forward, that clear vision, and all of your providers at the table to help make decisions that guide the business forward.
Yeah, and one of the biggest things we see, which is alluding to what you were saying earlier, is that you get in these a lot of conversations, and as the business grows, right, you think about exits. So you think of acquiring another business, or we want to open up another office in a different state. One of the things I always recommend is getting your advisors together. I often have, founders that will call me and they'll say, hey, I talked to the attorneys, they said this. I talked to my wealth advisor, they said that. And I would say, why don't we just all get together? Because you playing telephone as a business owner that's managing payroll, someone called in today, someone's not here, someone's retiring, leaving, whatever the case is. Let's get us all together. Don't play telephone, because the best thing you can do is put your attorneys together, put your accountants together, put your wealth team together, whoever that may be, into one room or one Teams call or hangout, whatever it is nowadays, to really sort those issues out, because those are, I think that is where the best value, because next thing you know, then the attorneys and the accountants are talking to you like, okay, you guys tell me the answer. I don't want to be in the gritty of the conversation unless I need to be. And that's probably one of the things that we often see where, and people get ideas all the time from colleagues networking, right? Hey, if you thought about my accountant that I could do this, talk to your accountants, talk to your attorneys and ask them those questions. Because we work with so many small businesses, I think there's always a fear of picking up the phone and just asking a question or shooting an email that you're going to get a bill. Attorneys, I know, do that. No offense to any attorneys in the room. But that is a very common thing. We don't do that as a firm. That's not our policy. And I think a lot of accountants typically are pretty well about answering those questions for you and being that support. So don't be afraid to ask the questions, because the amount of times someone asks me a question and they're like, I don't think this matters. And I'm like, oh, that matters. That's a big deal. Like, yes, you should probably address that. So again, talk to your advisors, make sure you're asking those questions, and just help making sure they're scaling with you as you grow as a business and you expand. Because, one of the other things that we see often as well as businesses expand is all of a sudden they start expanding to other states, right? That's a huge issue from a tax perspective. That's a huge issue as you grow. Some states more friendly than others. But you'd be surprised, like some states, I always say Texas is a very pro-business state, but the tax on Texas businesses, they have a gross margin tax. It's different. It's got a huge bite. And I think there's certain things that people may not realize. And then all of a sudden they say, how do I have this big tax bill from Texas? We had a loss last year, but they tax you based on gross margin and not on profit. So my point is, as the business is growing and evolve, make sure your advisors are growing and evolving with you for sure. Yeah, please do.
So for your own business, do you do very small businesses, or do you have a ceiling as to how many millions there are, or whatever? What type of business do you look for?
So I have everything from pre-revenue, which I know you do as well, pre-revenue startup companies that are evolving, to multi-billion dollars, which is a rare. I would say the majority of our clients are anywhere from, we'll say on average, 2 million to 100 million of revenue, just depending on.
That sounds about right.
But a lot more in that lower middle market. A lot of our biggest clients are clients that started as small businesses. They've grown, they've gotten investment from other, or whatever it may be. They've acquired other companies, and through growth by acquisition, they've just become these large companies, and we've just with them. But by focusing on those privately held businesses, I would say that segment of the market is our bread and butter as a firm for sure.
Yeah, I wouldn't say there's necessarily a limit. It's more about what are your intentions with the business, right? If you're planning to go a public company, let's get you aligned with a provider that does public company work. But if you are that, individual business owner or small company business owner, we are the perfect fit for you. And so I have companies that range from, we're still fundraising, right, in order to be able to begin operations, all the way to the billion plus. So the impact and the expertise needed for all those different entities is different, right? And that's the importance of making sure that you're talking to your providers and you're being very clear with what you want. And then we can bring the professionals to the table that help bring that expertise to you.
And then as you get to the later stage of the business cycle, right? You have the business growing, it's been, generating, cash flow for years, and you finally say, okay, the kids don't want the grass seed business anymore. We're going to go sell it. We're going to go out there in the market and sell it.
Yeah, the statistics on that are getting significantly higher, by the way. So if you think your kids are taking over your business, you might want to check in with them, because it's getting more and more likely that they're.
And so one of the things that we see, and I think, honestly, it's probably one of my most satisfying part of my job is when we're working with business owners through the years, and then they go to the exit. Obviously we still do the, handle their personal taxes, but the business goes away. So maybe our contact decreases a little bit, but to see the exit of a family grown business exit out and really see the fruits of all their hard labor through those years is probably the most satisfying things. And so one of the things, when you're thinking for like a big event like that, exiting a business or whatever it may be, there's a huge wealth component on the personal side that I think often gets neglected, because it's more so, I just want to sell the business, let's get the cash, and we're going to run away to the islands and never talk to anyone again, right? But there's such a huge opportunity out there from a planning perspective. Nowadays, there's things, and they're enhanced by the One Big Beautiful Bill and other tax reform in recent years, things like opportunity zones where you can take cash and invest it into some of these, things. There's donor advised funds. There's so many wealth planning tools that you can do. And whether it's more so of deferring tax now for later when, hopefully income's even less. So when you're paying tax on withdrawals later on, okay, right. But then also there's also generational wealth planning, hey, we want to transfer some of these kids. We don't want to pay gift tax. How do we avoid this and make it, we want the government to have as least amount of money as possible from what we've built up. And that's where the integration between wealth advisory, tax, and accounting really come together, because that's where, we want to make sure you keep as much money as you can on the exit. And so, like I said, thinking about those things now, estate and trust planning are huge opportunities, right? There's some great attorneys out there that will help you, think about your estate and trust and your life insurance policies, things like that, making sure you're not over-insured, but at the same point, you're insured to a level your family's taken care of. But then also, how do we move this cash to generation, push it the wealth to generation on a tax-free basis or tax-free basis? And that, I think, is probably the biggest piece that gets missed on the majority. And I forget the numbers, and it's trillions of dollars of wealth transfers about to occur in the next few years. And that's where I think the biggest need is really helping people understand in that generational transfer of wealth, how to do that on an efficient basis and limit the liability from it from a tax standpoint. So,
yeah, well said, Tom. And let's circle it back, right, to the accounting piece of that and making sure that you have your books in alignment. And once you begin that exit journey, you're going to go through something called due diligence. Those people are not nice. They are specifically looking to poke holes in your business and your operations, right? The better and tighter that your books are, the less holes that they're going to be able to poke and the less amount that they're going to be able to deduct from your asking price, right? It's all a negotiation. You're going to be on this side of the table. The people that are trying to buy your business are on the other side of the table. They will try to lowball you. That's part of the process, right? And the tighter your books are, the more aligned you are in keeping these tax strategies at the forefront and making sure you're taking advantage of all these things, not having any of these huge liabilities hiding under rocks that you flip the wrong one and you kill the deal, right? You just want to make sure that you're constantly keeping your numbers right at the forefront of your mind, so that you can keep the entity moving forward without having to kill a deal or change things up without you wanting to.
Well, then you're.
You adopt me and I'll take your business.
Well, you said it was you and your husband, so your husband will now be the 100% owner, most likely, depending on how it's structured. Well, it depends. It probably would go to probate. I mean, there's a whole, depending on the. Yeah.
Oh,
Yeah. And that will dictate it. And that is the. Yep. And that is the one thing I will tell you from, when you think about the transition of wealth and family planning, having those documents in order is unbelievably helpful, because otherwise probate is extremely expensive and it's such a terrible process, frankly. So the more that you could do from a planning perspective, have those attorneys look at those documents, have it down set in stone so everyone knows what's going to happen, because you never want that family at the end of the day saying, oh, I was told I was getting this, you're getting Y, So that's the one thing, is please talk to your attorneys and the accountants, but the attorneys will drive most of that from the estate and trust planning, but extremely important.
So I don't want to put a freeze in the conversation. I just met Shannon tonight. Crystal used to kick us out quick, right? The club, we have about a half hour or so before they want to wrap up and get out of here. I wanted to thank you for already kickstarting Q&A aspects. I want to throw it out there before we wrap up with this piece. We always want to leave 15 or 20 minutes for y'all to come harass them. Coasties love selfies. So if y'all want to take photos and highlight CLA, I always encourage that. Does anybody else have any questions, thoughts, comments about the big boogeyman up here? Yes, sir.
So, thinking of one client specifically, purchase business out of the service, business 20 years, now buys the business of which he has no background in, but he's a smart guy and he's going to make this business work. We have confidence in that. Trying to get him to get an accountant, get any kind of accounting work. He's like, Jack, I'm too busy. Listen, I tell him what happened to me when I was in my 20s. I worked at a bar and a hotel or restaurant with a business partner, and we did phenomenal. And then in the third year, our silent partner came, the IRS. But we didn't have how can we urge the impact of doing this, of directing them to accounting? They just don't I get it. I understand how crazy it is, but if you don't do this now, there are dire circumstances that are going to happen.
Invite them to our next event at CLA. We'll introduce y'all straight to them. It'll be perfect.
I always try to make people think about the long term. What is your exit going to be? And do they understand what that process looks like? Because to grow a business and generate cash flow is phenomenal. But, really where the wealth, you could be rich, but really what you want the wealth, right, is going to be on that exit. And if you're not doing the discipline and everything, you're going to get, the holes are going to be poked and you're going to end up thinking you have $100 million business and you're going to walk away with someone absorbing your liabilities. I mean, that's the reality of it. When you see businesses fail, a lot of times it's the lack of financial management, because they don't even know what their accounts payable is. They don't know who they owe money to. They just look at the bank and they say, oh, there's $1 million in the bank, but your liabilities are $6 million. Well, you're upside down. You don't even know it. It is a very scary thing, and it happens to a lot of businesses. I mean, even, you know, there's some big name businesses here that I've seen unfortunately go down for very similar lack of financial, you know, management and lack of financial literacy on the part, because look, they're business people, right? I got money in the bank. I'm generating cash, right? Isn't that what but they don't realize what they're leaving on the table, and really, you know, what their financial position may not be as good as they're thinking because they don't have a handle on what their liabilities are. That's the scariest thing, I think, for business owners.
And you don't even have to look out right for an exit event. You could ask them, what are you going to do for your taxes this year? It passes through directly to you. Well, what are you going to report on those? I guarantee it's probably going to be less than what you probably should, right? And for anyone that says that they don't have the time for it, that's the exact key to outsourcing, right? Like, and every single accounting firm out there has outsourcing opportunities, and you just got to find the right partner that speaks the same language for you.
And I actually have one thought on this, because it was something I poorly learned in entrepreneurship in the early days. How many people go for like every tax write-off you possibly can, so at the end of the year you showed you made $0? Anybody? Right? That was great for years because I had a lot of money, right? Like I was making money, my company was making money, my tax burden was different. And then I went to go get an SBA loan for an expansion. And they're like, hey, guess what? For 5 years, you've not made any money. I'm like, the hell are you? I use a different word, but I'll go with the hell are y'all talking about? Like, well, you didn't make any money, so we can't actually back you in this. So there's also a mindset shift to this where I didn't know any better. I'm an Army dude and great Army guy, not a great money guy. Why one of our pillars at ATLVets is money management, because this is stuff that we have to learn, especially a younger generation that doesn't know how to balance a checkbook, right? That's like a lost art. So I think this is a big piece. And then one of our first acquisitions that we were looking at went through the due diligence period, and he listed it for like 10 million. We're like, awesome. And it was like a 2.5 EBITDA. He was doing great. And then they did all the things, and one of the burdens, he was going to walk away with 300 grand. And that was his exit strategy, 300 grand, because he didn't know of all these liabilities. Like, it's shocking how often it happens. And he decided not to sell it because he's like, I make more than 300 grand a year. Why would I sell my company for 300 grand? So these things, to your point, very, very important.
And lastly, I know we're running out of time. You know, the other thing too that I do question clients about a lot is also understanding the business. What I mean by that is somebody, oh, I have this great business, we're making money. I'm like, yes, but you have 2 clients that are generating that. There's a huge risk in that, right? Because if you go to sell and then all of a sudden those clients are like, well, look, we don't want to deal with XYZ buyer or private equity, whatever the case may be. Having those conversations and helping them understand value. I know you did a number of things in valuation in your career. Those are huge value questions, I think, that people often don't understand, you know, of how those little things impact the overall value and your exit potential, you know, so.
Yeah, and people like to think of accounting as a quantitative exercise, right? Where it's strictly about numbers, but where, right, when we were talking earlier, the numbers can work for you. It's taking the quantitative and making it qualitative that accountants are specifically extremely good at, and you want to have those types of people in your corner. Right? They're the ones that can interpret the numbers for you, tell you what your AR aging is, what your turnover is, how often you're going to need to re-up your purchases if you're a manufacturer and you need to maintain your production line, right? All of these things are predicated on the numbers and the data that you have available to you, and you can't effectively manage a business without it.
I think we have time for one more. Anybody else have a question? A thought? Yes, sir.
So we spoke about growth and going into different states. In today's sort of technological evolution, right? Most companies are just hiring people and not locations. They're not buying offices. They're not, you know, renting out spaces. What's the difference in tax from a perspective of if I've got, you know, 1,000 people globally versus with no offices versus 1,000 people globally and I've got 5 offices?
Well, the way government looks at you is if you have a remote employee, you have a physical presence.
That's a great question. Wayfair just happened a few years ago.
Yeah. So if you have a remote employee, let's say that they're in, you know, Illinois, just say, right? The way Illinois is going to look at that is that, well, you have an office, you have a physical the company has a presence in that state because of payroll. The 3 things they're going to look at: sales by state, payroll by state, and fixed assets by state. Those 3 prongs. There's more to it, but those are the big highlights. And so, yeah, that's a big issue we run into. I always use the major league example. So if Aaron Judge is here and he's playing a 3-game series, you know, in Chicago, well, he's going to pay Illinois tax and Chicago City tax on that income that on that 3-game series that he played in that city. That's how it works. There is a whole thing right now about the Super Bowl. I was just going to say that the Super Bowl was a thing because of the taxes that they get hit. Yeah, because of the way that they see it. Well, you were here for 8 days. I mean, and the other thing too, I deal a lot with international companies as well. They can pull your passport to see like when people enter the country or not. I mean, that's how, I mean, they have a lot of information at their fingertips, that become, an issue. So yeah, just by hiring employees or, having big customers in certain states, you can have what's called an economic basis. And that's the big thing so let's say I have one client that they're based in New York, but I have no people in New York, but we generate $1 million of sales. There's a high chance I probably have to file a New York State tax return because I'm creating a market and generating income from that state. And that's every state. Florida's no different. So that is a concept that is all 50 states. And again, we have no individual income tax, but we have a corporate income tax in Florida.
And the best part, every state is different. Every state has different rules and will adjudicate it differently. So, having those experts to be able to help is incredibly important.
Awesome. Y'all give them a round of applause, please. So, like I said earlier, it takes a lot to get an accountant out of their office and in front of people. So I appreciate y'all being here this evening. Please take some time, get to meet them. Their office is downtown Tampa, PNC building. Thank you. So we'll have a few more events coming up, some workshops. Their space is amazing. So if y'all want to come up to those, you'll see those on our calendar. This time, same place next month, the 17th of March, we'll be here again. A lot more things coming up soon. So thank y'all for being here, and y'all mix and mingle.